Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update, and we're already on Wednesday's trade for February 7th, but it is late afternoon at 5 p.m., just after it actually, on Tuesday, February 6th. Why do I confuse you? Because you already got the markets open. I'm already up over 12 hours at this point. Well, I'll be up about 20 today before I even hit the sack. We had some good snowstorms in Chicago, and in the city, if you own a home, and I live right in the heart of the city, you got to make sure your snows, everything gets plowed and moved away, and then you got to get to work. And in the center of a storm, it's not the easiest thing. But this is about the metals, and it's interesting what's going on. First off, they've stretched out the gold-silver ratio even further today, knocking on that door of that 80 area that's a historic high. Second, the stock market crashed last night again, went down 650 points, only to come back 800, close 800 higher. So if you think that you're got the metal to trade that, God bless you. In the metal markets, the bids of yesterday, once the stock market came back, turned into offers. That's what went on. The dollar index was up a little bit, and most of the currencies are still lower on the day. This is the reopening of the market right now. When we take a look at a weekly chart of gold, you're in a correction phase. But keep in the back of your mind, you had a rally here that went over $100 an ounce. You can afford a correction phase and not change the bigger complex of this market. When we come to the daily area chart of closes, we have now corrected down to 1327.40. We actually were down here from 1368. So we have a $40 correction. The thrust of the market is down. I think you can see that. It's under the 18-day average of closes. When we look at today's action, this is tonight, the new trade. But look at this big reversal. That reversal is very important because if the highs of Tuesday are taken out on Wednesday or Thursday, this turns into a bear trap. But you've got to get over that. Barring that, when we put the swing line on the chart, we can see we've got a pretty clear-cut pattern of lower highs, lower lows. That is not bullish. That is bearish. What takes you out of that is getting over 1349.30. You're under the 18-day average of closes, where this market, for how many days? Look at all the days that it keeps hitting that number. Remember what I told you, that the red line, the 18-day moving average of closes, I consider that the line in the sand. Why? As I did all my analysis and continue to do it, I just see that that's a number that is so often the number that the market swings around before a trend is determined. So right now, we have a downtrend. We have lower highs, lower lows. The bias is down because you're under the 18-day average of closes. The break today, I want to carry you to this. Today's low, 1322.80. Look at the Bollinger Band bottom here. Literally right there. So what the market did is it went down to that support, bounced away. It can go down and challenge it again. There's no magic in just one time doing that. It could. And if that gives ground, maybe the 1300 level, the 100-day average, comes in. What else do we know? We know that on rallies, 1342 is the resistance point, and we also know this market is oversold. So you have a market that's oversold. It is hit or just gotten within hairs of hitting a downside target of the lower Bollinger Band in an oversold condition. I will be surprised if it slides further and you don't see some profit taking by the shorts. In the GLD ETF, oversold, lower highs, lower lows, 125.11 is the downside target. You missed it today by 11 cents. I would again say this. I will be surprised if you don't see some short covering tomorrow against that number. GDX, this market has been the sign that gold isn't holding up. The miners have been very, very weak, and that's what this is. And it's the lower highs, lower lows. Now, Here's another thing that I always look at. How many days are you under the lower Bollinger Band? Today, yesterday, and the day before you weren't. So you have 2 days in a row under the lower Bollinger Band. 5 is typically about it. I take away for each consecutive day under a Bollinger Band out of the 5% is a rule of thumb. There's no magic. It can go 6, it can go 7. It rarely does. So my rule of thumb is that there's a 3% chance for tomorrow, because 2 consecutive days in a row takes 2 of those points away, that the market won't close over the Bollinger Band. Okay? In other words, if you want us out and out bearish, I'm not saying that this is the best spot to do it. I think you can get it done over the Bollinger Band. Does it have to get there? No. It can go straight down. What are the percentages? 3%. In the gold-silver ratio, you're back and knocking on the door of the 80 level. So you've gotten back to the high of this point. Now, each time we've gotten up into this high point, we've given up ground. We'll see if that's going to be the case again. In the silver market, you certainly have the lower highs, lower lows. The disaster for silver happened back here, when you took out first that low and then the 1673 level, right like that. It's got to regroup. Now it's pushing out that sideways Bollinger Band, and that's what it's trying to do, find out if it can push it and how far. It is oversold. The bears have control, and they'll maintain that control until you take out this swing line or close back over 1706 in the meantime. The copper market is every day hitting this 18-day average, and as I've been pointing out, it keeps narrowing in these black dashed lines. The black lines are the Bollinger Bands, an algorithm designed to keep the market trading within them. I've got to get you thinking that when they start going somewhat sideways, it's like a pipe, and you got a spring in it that you're doing this to. And eventually, think of it this way. What's going to give is not the spring. One of the sides of the pipe are going to give. Now, if the market breaks down, it's got support closer to the Bollinger Band and the 100-day average, and if it gets over this number of 325.75, it can start pushing out that upper band. Right now, it's not telling us or giving us an indication which one. I could say momentum is up. I can live with that. The bias is up because you're back over the 18-day average, but you're not trending. You have that higher high, lower low. If I look at the platinum market here too, like the other markets, it made a run for the lower Bollinger Band, just missed it in an oversold condition. It had an outside day down today. If the market takes out 1002.90, it's a pretty good warning signal that the downside momentum is going to end, and that you probably get back to that 18-day average and fight a battle there. Until it occurs, you still have the shot to get to the lower Bollinger Band, about $10 lower. In the palladium market, you hit the combination today of the 100-day average, the lower Bollinger Band, and what about getting an embedded reading? Both numbers under 20, both under 20, both under 20. I would say that pros are covering shorts, not getting out of all their shorts. Covering shorts is a big difference. Lose the embedded reading and they'll be gone. Give them an indication. So it's one of these things that they're watching it tick by tick, probably trying to figure out what to do. In the dollar index, when you lost the embedded reading, and I'll show you right here, this day, you had a 2184 reading after being embedded. It puts together the theory that I have that price and the 18-day average are going to make a run at each other. Market comes up, market goes up, hits it, satisfies that. Are you trending? Yeah, you've got the swing line up, but you're under the 18-day average, so the bias is down, so they wipe out each other, and price is leading the momentum up. In other words, I said it wrong. Momentum is leading the price up at this point. The market is now in an oversold area. When you get this number, it hasn't reopened tonight, but if this number gets over 30, it's no longer oversold. So that's how I'd analyze that market. And you know, we talk about so much the research we do. I do my own research, as many of you that get it already know. Well, Linn & Associates does a fabulous job of writing about commodities for commodity traders. And that's the difference. We're not writing about it to just put out there. We're writing for commodity people. And it's refreshing, because you're reading about people that have years of experience. What do they see? We have technicians, we have fundamental people, and they're writing about all these different markets. And no, you don't need to get all this information. You might have an area where you want to get the information. Go out and try to get good meat or grain information. Hard to do. Can you get a lot of metal information? For sure. Energies? Yeah. You're not going to get the livestock. You're not going to get the grains or the softs in most spots. We really specialize in this. And we've carved a niche for ourselves because there are commodity traders that are saying, you know, the stock market's too volatile. I want to go back to commodities. I'm hearing this could be the year where inflation picks up, blah, blah, blah. Well, if you'd like to see what we write for our clients, we'd like to give you a free 2-week trial. But that's it. You try it once and either open up an account with us or that's it. 866-973-2077. You can see our website address right on the screen with you. You can click up here if you're watching me on YouTube, or underneath this, it says click here for Ira's free information. It's beginning of the year. Take advantage of it. You might like what you see. You have a good day. I'll see you all tomorrow.